When will you bring back the startup news videos on Saturdays? I've been waiting for it for months now. Bring back the weekly news videos. What happened to startup news? Bring back the weekly news show. I would still love to see the weekly startup. Why did you guys stop the weekly news podcast? I liked it a lot. Okay, so we are officially back with the weekly startup news series, and I honestly didn't realize how much you guys enjoyed this series until we stopped doing it, and then all of you spoke up, and I really appreciate that. Thank you for letting us know how much it meant to you. So we're officially back now, and let's just jump right in because we have a really jam-packed news video to share with you guys here, news video 149. Okay, so let's start things off by talking about SVB, Silicon Valley Bank, for those of you who don't know, but I'm pretty sure most of you have heard of this. It all happened last week, so it's kind of old news at this point, and I want to look at it from a slightly different angle because I think it's possible that Bengaluru, the Silicon Valley of India, might actually see a bit more traffic from foreigners, foreign investors, and also foreign founders who might be looking for greener pastures outside of the United States. And this SVB crisis, and also New York Signature Bank shutting down as well, might be the straw that broke the camel's back in this story, where people are finally getting fed up with the American startup ecosystem. So to start this topic off, I want to look at a tweet from Tom Lavero, and he's from Menlo Park-based venture firm IVP. He said, there's a mass extinction event coming for early and mid-stage companies. Late 23 and 24 will make the '08 financial crisis look quaint for startups. Now, he tweeted this out in January of 2023, so well before anyone knew that things were going to go sideways with SVB, and he clarified also by saying that merely okay pre-product market fit startups will die at a greater rate than anything we've seen since 2008. And it's easy to dismiss the predictions that people make on Twitter, but Tom kind of knows what he's talking about. He's listed as one of the top 100 tech investors in the world by Forbes in 2021. So if you want to read the whole thread, it's 21 tweets long. It's quite interesting. You can find a link to it in the description of this video. Now, I want to come back to Tom's tweets in a little bit, but before we do that, let's take a look at the actual SVB situation, and specifically what Gary Tan, the CEO of Y Combinator, said during that situation, because it's eerily similar to what Tom had said back in January of 2023. This is an extinction level event for startups and will set startups and innovation back by 10 years or more. And then also in a petition, he wrote over 100,000 people could soon lose their jobs. And he was of course referring to the SVB crisis and the fallout from that crisis. Now, of course, some of these 100,000 people, 1 lakh people, may have actually been Indian employees, people either working in India or people who were employed in the United States but were of Indian origin. And according to TechCrunch, over 60 YC-backed Indian startups have more than $250,000 stuck in accounts with Silicon Valley Bank. And that was just YC-backed Indian startups. Siddharth Pai, founding partner at Bengaluru-based 314 Capital, said that he estimates Indian startups' exposure to SVB to be in the range of $2.5 to $3 billion. That is a lot of money. And so the important question that we first need to answer is, were all of those Indian startups able to get their money out of SVB? And it looks like the answer, thankfully, is yes. As of the 15th of March, Indian startups were able to withdraw 2,400 crore rupees from SVB. That's roughly $292 million US. And obviously that's just a tenth of what Siddharth Pai had predicted Indian startups' exposure to SVB was. But according to SVB's own website, Silicon Valley Bridge Bank, NA, is a newly created full-service FDIC-operated bridge bank. Further down, they said that Silicon Valley Bridge Bank NA is open for business, processing payments, funding loans, and serving our clients. And we are grateful to the FDIC for protecting all the depositors of the former Silicon Valley Bank. We are committed and engaged in rebuilding your trust. Okay, so crisis averted, right? Everything's all good. Not really. Things are never going to go back to the way that they were. Minister of State for Electronics and Technology, Rajiv Chandrasekhar, gave this perspective that I think is applicable for all Indian startups who are banking in the US. He said, with this US government action, and he's talking about the FDIC taking over SVB here, looming risks for Indian startups have passed. And also that the learning for Indian startups from this crisis is to trust India's banking system more. And by the way, he had tweeted this right around the same time that the FDIC had taken over New York's Signature Bank too, thanks to the domino effect caused by SVB and also Signature Bank's cryptocurrency focus. So I think it's pretty safe to say that there aren't a lot or probably any Indian startups or startup founders who are interested in banking with SVB in the future. Even Silicon Valley Bridge Bank, NA, it's just not something that anyone is interested in doing. But Indian startups and startup founders weren't the only ones who were affected by this crisis. You also had African startups that went into a panic when this happened, and also Latin American startups were also impacted by this. But obviously, American startups were the ones that were affected the most. Everybody thought that Silicon Valley Bank was safe, that it was bulletproof, and it wasn't. And so this is where we come back to that 2023-2024 doomsday scenario that Tom had predicted earlier. Morgan Stanley is saying a high proportion of startups may fold before the end of 2023, with the headline reading, "Emergency measures may have alleviated immediate cash needs." And they're talking, of course, about the bailout of SVB, but the rising cost of funding poses a longer-term challenge. And this absolutely extends beyond the SVB situation. Okay, so what do? You're an American startup founder. You've just gone through this really scary, out of your hands, you didn't do anything to deserve this situation with SVB or perhaps New York's Signature Bank. And you also have this potential looming extinction level event for startups on the horizon. What do? Well, for the time being, probably if you're actively still building your company, if your company is still around after all of this happened, then you're probably just going to put your head down and keep building and hope that nothing worse happens in the future. But what if it does? What if these predictions by Tom Lavero and Morgan Stanley actually come true, and towards the end of 2023 and into 2024, there is, in fact, a massive event and a lot of early stage startups actually go out of business because of this? Well, this is where I think Bengaluru could come into the picture, and I'm thinking it's possible that there might be a wave. It might be small, it might be big, but a wave of investors and also startup founders from the United States coming and looking elsewhere in the world for a place to start their next company or their next firm. And it's possible that Bengaluru might be one of those destinations where people look at it and say, oh, there's a thriving startup ecosystem. Why don't I go there? And I honestly just feel like people in America right now are struggling. There is so much tension, there's so much division, there's so much violence going on that I think some people are actually thinking, why don't I leave this country and not look back? It's not working out here. And they might want to be in the world of startups, but they just don't want to be in the American world of startups. And if you look at the top American startup cities, there's a lot of problems in those cities too. San Francisco, for example, has a huge drug and homelessness crisis going on that actually makes it unsafe to live there because there's a lot of petty crime. LA basically has the same problems. New York is essentially a hellhole if you're not a millionaire. It's super difficult to survive there on a basic salary. And Boston, I mean, I don't know. I've heard that the weather sucks there. So where do you go? Where in the world could you possibly go to start your next company? Well, these are the 10 most popular cities in the world right now to start up in, according to Startup Link. So 4 of them are the American cities that I just listed. And then at number 3, we have London. And I have nothing bad to say about London, honestly, besides the weather. And maybe it's probably a little bit expensive to live there, but honestly, I don't know much about London. And then we have these 2 Chinese cities, Beijing and Shanghai. And I would also add Shenzhen as well if you're wanting to start up in the hardware space. But this isn't 2019 anymore. With the Chinese government's crackdown on startups and also the way that they handled the pandemic really heavy-handedly, in my opinion, with their failed zero COVID-19 policy, China is off the table for a lot of founders, even if these are relatively livable cities, especially compared to Bengaluru. So now you get down to the bottom 3 cities, Bengaluru, Tel Aviv, and Paris, and all 3 of these have their pros and cons, but I think one big strength that Bengaluru has, besides the amazing weather, is the strength of the Indian banking system. Founders and investors who are still in shock about what happened with SVB, who are interested in coming to India, will see that the RBI hasn't really been giving away a lot of free money to the public, which means that inflation has been kept more or less in check. What's more, India has a strong economy. Exports are increasing, and inward remittance from NRIs into India is on the rise too. It actually touched an all-time high in 2022. Sometimes the firm, strict hand of the RBI has upset people, especially in the Web3 space. We saw this with the crypto movement, where the government of India put a 30% tax to effectively kill cryptocurrency in India to ensure that the volatility of crypto value didn't cause panic in the Indian economy, which it may very well have if left unchecked. Honestly, we've seen countless times in the United States how bad actors in the crypto space can wreak havoc on investors and the public at large. And India has been able to avoid most of these big scams, thanks in part to how strict the RBI is. Now, coming back to banking, India doesn't really have an equivalent of SVB. There isn't really a startup-centric bank the way that Silicon Valley Bank was a startup-centric bank. And part of the reason for that is that India's startup ecosystem just isn't really big enough or mature enough to justify such a bank existing. And so a lot of startups just bank with the big Indian banks that everyone else does. These are well-known, relatively trustworthy banks like HDFC, ICICI, and SBI, although you do also have some other banks that are specifically targeting startups like IDFC First and also Bank of Baroda. Now, I would be remiss if I didn't mention some of the cons, some of the reasons why people shouldn't come to Bengaluru and instead might prefer a city like London, Tel Aviv, or Paris. And the first thing that I'm going to focus on here is access to external capital. Investor money is just not as accessible in Bengaluru as it is in the United States, and potentially as easy as it is to gain access to in other places around the world, like the cities that I just mentioned. And this is largely due to India's nascent M&A market, mergers and acquisitions market, which means that investors are more risk averse because there's a higher likelihood that they're going to lose all of their money when the startup that they've invested in goes down and the startup is not able to be acquired before that happens. And so this is why you see a lot of Indian founders registering their companies outside of India and raising money from American and Chinese investors instead of going to local investors. Talent is another issue. Yes, India does have IITs and there's also BITS, but honestly, you just can't compete with the Ivy Leagues. Harvard, Yale, Princeton, Columbia, and also non-Ivy Leagues like MIT and Stanford. Next, we have another one which could be seen as a pro, but it could also be seen as a con, which is India's risk aversion. Indian consumers are just less likely to spend money in a consumeristic way, the way that you would see in the United States, and that actually makes it harder for startups to make money. Also, consumers are less likely to try new products or ideas. Bengaluru is one exception. I have seen that a lot of consumers here do like to try new things, but generally across the board in India, that's not the case. And so it can be hard for startups to actually enter into these latent demand markets where consumers don't realize that they might want something because they're not willing to buy it because it's something new. Unfortunately, this also means that there's less innovation generally in the startup world because Indian founders are less likely to think outside of the box. They're also less likely to take big risks, and they don't generally think on a global level. This is something that I've noticed over the last couple of years of running this channel, which is one reason why it is incredibly uncommon to see Indian brands outside of India, whereas a lot of American startups export their brands to every other country in the world and become globally ubiquitous. Another con here is that the government of India, although they have been trying to adapt, is generally too slow with their regulations and compliances to keep up with the fast pace of startup businesses. And like I said earlier, this can actually be a good thing because America's system is more flexible, but that means that there's more wiggle room for bad actors. But heavy-handed compliances can also stifle innovation from well-to-do founders, so that'll be a pain point for any foreigner who wants to start up in India. Now, the next thing that I want to point out is something that I actually know very well personally, which is that, and we're going to focus in on Bengaluru again, it's not a diverse city. Yes, it is diverse from an Indian perspective. You have Indians from every corner of the country living in Bengaluru, but from an international perspective, it is absolutely not diverse. It is extremely rare to spot people who are not Indian origin. Finding people from outside of India in Bengaluru is not common, and when they are here, it's usually because they're on a business trip. It's usually not because they're actually living here permanently in the city, the way that I am. If you go to London or Paris or New York or San Francisco, you'll find people from every corner of the globe, and Indian cities generally just don't have this, which makes it hard for non-Indians to feel totally comfortable and at home in Indian cities. And then finally, we have the most obvious con. Anyone who's lived in Bengaluru knows all about these things. Infra problems. You've got potholes, you've got traffic, a little bit of light flooding here and there, pollution, water quality, power cuts, spotty public transportation, and all of these things remind Bengaluru residents that India itself is still firmly in the developing category. This is not a world-class city by any means. And by the way, that last one, spotty public transportation, actually brings me to the next news item that I want to talk about, because on March 19th, something happened. The Bike Taxi Riders Association of Karnataka held a protest at Freedom Park seeking immediate assistance for the safety of the riders who have been victim of attacks and abuse from auto drivers who see them as a threat to their livelihood, with a recent viral video showing an auto driver smashing a Rapido driver's phone. The following day, March 20th, auto driver unions held a 24-hour strike in response, protesting against bike taxi services operating in the city. And they were pointing out that Rapido and Ubermoto and other bike taxi services are operating illegally in the city. And so this is a pretty tense situation that we've got here. Now, this is a bit of a generalization, but I would say that overall, the strike wasn't received positively by most people outside of these unions. The police ended up detaining a bunch of auto drivers who were protesting, and then there were also some auto drivers who weren't participating in the strike at all. They decided they didn't want to do it. They wanted to make money that day instead. And so then auto rickshaw union leaders were trying to stop these rogue drivers from plying. And then also there were some auto rickshaw drivers who were trying to capitalize on the situation by charging more money from passengers and trying to squeeze as many passengers as possible into their autos to take advantage of the situation. Now, I'm going to be completely honest here. Even if bike taxis are operating illegally, I will always choose them if I have an option to, because the way that auto rickshaw drivers actually operate in the city is also not fair, and I think is technically illegal by the fact that they don't use their meters 99% of the time, and actually a lot of the meters are not even legal meters. In November of 2021, the Department of Legal Metrology said that it has approved digital fare meters for only 75,000 of the estimated 1.45 to 1.75 lakh auto rickshaws operating in Bengaluru, meaning that most of the auto rickshaws that are plying illegally. So there you go. Welcome to Bengaluru. Anyways, let's move on to the next news item here, because I don't know if you've heard about this, but SBI is planning to, or maybe they're already giving out sound boxes to compete with the likes of Paytm, PhonePe, BharatPe, and a couple of other of these fintech companies. So this gives me an interesting opportunity to talk about why these fintech companies give out these sound boxes. What's in it for them? Well, there's actually three major reasons. The first is the most obvious: branding. You see a colorful QR code sticker, or you hear a soundbox playing a distinct little tune, and it actually builds brand affinity subconsciously. You begin to trust that color or that logo or that sound with your money, with your transactions. Now, the second reason is relationship building. So a QR code or a soundbox is essentially a physical representation of an online payment gateway and the relationship that they have with the merchant. So if you see a merchant with a BharatPe sticker or a Paytm soundbox, that means that that merchant actually has a relationship with that fintech platform. The merchant has that app on their phone, and they're actually in a business relationship with that company. And that may or may not mean that that merchant is giving the company money. For example, Paytm's soundboxes can cost as much as 125 rupees per month to own, not including the between 299 and 499 cost to purchase the soundbox outright. But ultimately, this financial relationship isn't as valuable to the fintech provider as the data that they collect, which brings me to my third and final point. See, being a merchant's gateway provider allows for the collection of lots and lots of data. And as we know, in 2023, data is gold. Even if these fintech providers are losing money on these voice boxes, they still want to continue that business relationship with the merchant because they can learn so much from that merchant and the merchant's customers through the data that they collect from their transactions. So this all brings us now to SBI, and they're setting up these sound boxes because they want to establish a strong relationship with merchants. They want merchants to trust them, rely on them, use them, but ultimately what they really want is for merchants to put money in their SBI current accounts. This is the end game. Now, of course, this does lead us to another question, which is why does SBI want merchants to put money into their current accounts? Well, it's actually because SBI's CASA ratio is at an all-time low. Now, what is a CASA ratio? Well, this is the ratio of deposits into current and savings accounts to total deposits. And I'll kind of explain that for you. There are other accounts, of course, like fixed deposit accounts and recurring deposit accounts, and banks actually have to pay higher interest on these two accounts. So they usually want you to keep your money in your current account first, and then secondly in your savings account because they have to pay less interest for those accounts. So I don't know if you're following along here. I'll try to break it down for you. Sound boxes enable SBI to establish influence with merchants and influence them to actually put more money in their current accounts. And by putting more money in their current accounts, SBI is able to increase their CASA ratio, which means that they're more liquid. They have access to cheaper cash. And with that cheaper cash, they can actually issue cheaper and more affordable loans to capitalize on the upswing that India is having right now when it comes to credit. People are actually getting credit cards and loans more than ever before. And so SBI wants to capitalize on that, but they can't do that if they have a low CASA ratio. So that's the SBI soundbox situation in a nutshell. And I'm curious to know, leave a comment down below. Let me know what you think. Is SBI actually going to be able to compete in this highly crowded, highly competitive soundbox and QR code and fintech space, or not? Is this actually something that they shouldn't be doing? Let me know what you think. Now, I just have one more piece of news for you guys. I know it's been a long video, so I'll sign off soon, I promise. But PhysicsWallah is in initial talks to raise $250 million, and at a valuation which is 3x their current valuation, which is very impressive in its own right. Startups don't usually raise that much money here in India, but I think also it's even more impressive because of the space that PhysicsWallah is operating in. This is the edtech space. And since the pandemic has ended, a lot of parents have moved their kids into the offline education space where they're going to schools, they're going to colleges, they're going to tuition centers. And so the fact that PhysicsWallah is currently able to succeed in this space to the point where they're going to probably be able to convince investors to give them that much money is extremely impressive. Okay, thank you guys so much for watching this 149th news video, and I'll see you in the next one.